or anything out of the box we think of doing, he says, Karo yaar. Chalo Madan, Karo yaar. Introduce and welcome the audience, please.
It is my privilege to address you all on this exclusive session, Decoding Budget 2025, which has been organized by the Sindhi Chamber of Commerce in collaboration with 361 Wealth. We are indeed honored to have with us two distinguished experts, Mr. Venkatesh Kalyansundaram and Mr. Vikas Khemani, who will be sharing their valuable insights into the tax reforms, market implications, emerging business opportunities, streaming from the Union Budget presented by our Honorable Finance Minister Srimati Nirmala Sitharaman on 1st of February. I would have gathering a heartfelt note of appreciation to Team 361 for facilitating this partnership and bringing this wonderful team on board. This is budget consolidation, infrastructural development, digital transformation, and MSME these challenges effectively. At the Sindhi Chamber of Commerce, we firmly believe of staying ahead in business requirements. We look forward to continuing these efforts with many more such initiatives aimed at fostering leadership and growth among our women members. Build synergies and unlock new business opportunities through correctly considering a bill that may adversely impact the banking, financial sector and money lending sector, the Bulla Act. As many of our Vice President Ashish Ambala has been set up and is actively working to address these concerns and submit our feedback to the relevant ministries. In fact, today I'm really happy to say that we have a record attendance. So please give a big round of applause to yourself. I think a budget talk, we've always had a gathering, and God bless everyone.
Raghavendra Prabhu to please come on stage and enlighten the members here of what 361 exactly.
Okay, first of all, thank you for giving us an opportunity to be a part of this wonderful gathering. It's been our pleasure to be collaborating for this event, and we hope to make this evening, knowledge. Before we get into that, would just like to take 5-7 minutes to take you through, our journey of 361, about 16-17 years. But I would just like to highlight a few pivotal, milestones that we crossed. Between 2008 probably was the worst. We started our journey in terms of how we grew from there on. 2015 was a landmark year for us because we always wanted, is when we listed ourselves. 2019 we listed ourselves on the National Stock Exchange and the Bombay Stock Exchange. And 2022, Bain Capital, which is one of the largest private equity, in 2008 to about 45,000 crores in 2025. So that really has been our journey. And along the way, things like creation of a private family trust, to setting up their family office, to look at their portfolio advice. And as I go along over the next couple of minutes, I'll also talk to you about the different locations that we are sort of present in. Team sits in India, but we've also got significant operations in Singapore, Mauritius, Dubai, US, and Canada. So currently we are about 1,200 odd people who cater. So if you actually look at Gift City, Gift City is a platform that we recently got our license. There's been so much interest, by business families around Gift City. How is it that you can repatriate money using for that? Then our family trusteeship business that we've run, where today a lot of business families are also looking at how does it be slightly different. We are India's largest alternate asset managers. So if you look at some of the unlisted ideas that we've invested, right from a national stock exchange, pretty much everyone who comes up with a bright investment idea wants to onboard with us. So between 22 and 24, we just took out that number. I think there were 9,000 investment ideas that were presented to us. So our first level of filtering, we said, okay, about 90% of the ideas don't even fit, some of our quality filters that we put in place. But out of 871 ideas, between that, we really put in our effort. We've got a large team of 200 odd people who are really sitting and day in and day out, only looking at what are the ideas that we should sort of build on to client portfolios. So, like I said,
Thank you so much. Now, since all of us here are family-owned businesses, most of us here are family-owned businesses, I would, and one of the core strengths of 361 is estate planning. I would request Ms. Ruchi Sharma to just give a small introduction to estate planning, and then we move on to the budget. Ms. Ruchi Sharma, please.
Hi everyone, Venkatesh here. Good evening, ladies and gentlemen. I think I'm going to set the hype down right now because while the budget is important, there is one huge change which impacts everybody in the room. Beyond that, the changes are very minimalistic, simply because I'm going to ask the chairman here, we should have another opportunity in 6 months' time when the new bill becomes the law, for us to present a little more wide and better budget decoding. So with this, I just want to set the context of what is the key changes in the budget. There is, of course, this life-changing event that has happened in terms of once-in-lifetime slab rate change or basic exemption change. Let's spend some time understanding the key provisions. I've taken the liberty to expand the conversation beyond the budget 2025 to also cover two more areas, which is one very common area as wealth managers we come across founders like you dwelling into is, what do I need to do when I sell a business or monetization of business? I've tried to cover some aspects around it, and the recent trend of spate of IPOs. What are the key steps for families like yourself to get into an IPO journey? These are the three parts we're going to cover: budget, sale of business, and IPO. I'll try and cover it as fast as I can. I've already been told we are behind the schedule, but I'll try to do it as fast as I can. I think the biggest change is the first three slides. 2014, when Modi government took over, when they started the government, the basic exemption limit was around 2 lakhs. I think nobody could guess what was part of the budget proposal. We all had an internal guess or internal bet that it will be somewhere around 9 lakhs or 10 lakhs, but it went beyond all of these numbers. And today, we've been informed, as per the budget proposal, the basic exemption limit under the new regime is going to be around 12 lakh rupees. So that's a huge change. Not only that, under the new regime, I think the slab rates have changed drastically. They have introduced a new slab rate and they've changed the existing limits as well. So as one can see here, the slab rates are in the multiples of 4, and they've introduced actually 2 more slab rates, or rather 3 more slab rates above 15 lakhs. And that's a welcome change. It really makes a big difference for all income earners across various bandwidths. So even an income of around 50 to 60 lakhs, there is going to be a tax saving of about 1 lakh rupees if you fall under the new regime. So government is very clearly promoting new regime. They want to do away with the old regime. The new regime is the default regime. So if you don't choose anything in the income tax return, you will end up filing returns as per the new regime. So please be very careful about when filing a return, talk to your CA, because new regime doesn't come with deductions. The deductions that we normally claim as, let's say, a salaried employee, HRA is something very significant, LTA is something to do with, but HRA being the significant one, or loss against house property interest, or claiming interest deduction under house property. These are some common deductions which are allowed under the old regime, not available in the new regime. So new regime comes with its own limitations, but the slab rate change and the basic exemption limit are something to look out for, and very, very drastic and significant steps in our Indian income tax changes. One thing that we all should keep a note of is the government released an FAQ which stated 8.5 crore income tax filers are going to benefit out of this. I went back a couple of years and saw, as part of the tax disclosures of 22-23, there were almost 6 crore income tax filers who were below 12 lakh income. Of course, there was a significant 2.5 crores who never paid tax in that part of the analytics as well, but we are still talking about a significant number going to benefit out of this humongous tax change. Some things that we have to keep in mind: old regime tax rates have not changed. Tax rate for companies, partnership firms, LLPs have not changed. The surcharge and cess continues to be the same. Your standard deduction is 75,000 under the new regime. The old regime continues to be at rate 50,000. There is a concept of marginal relief. I'll explain you in the subsequent slides, and rebate. So broadly, we all should be happy here. We have some more money to take back home if we all fall under the new regime. Slightly technical, but let me quickly run it past. Rebate is simple. We have a slab rate starting from 4 lakhs. So a lot of clients did ask me this question: what is the concept of 12 lakh rupees exemption and what is the slab rate around starting from 4 lakhs? Simple. If you have your income, which is taxable as per slab rate, not as per special rate of income. In income tax, you have multiple rates, and of course it's drastically reduced courtesy the last budget. Now we have special rates for capital gains, and we have slab rates for all other set of income. If you have slab rate income below 12 lakhs, then your entire income is exempt, even though the slab rate starts from 4 lakh rupees. So essentially, rebate is nothing but a guarantee given by the government, even if you have income more than 4 lakh, but the policy is that we will not tax you up to 12 lakhs. Rebate section gives you the 12 lakh exemption that you all are eligible for. Again, of course, this is only available if your income is below 12 lakhs. If you're above 12 lakhs, rebate doesn't come into play at all. Now, marginal relief is a concept which is also there in the law. What if somebody has an income which is 12 lakh 10,000 rupees? Now, if you see in that situation, technically if you fall under the new slab rate, you end up paying 61,500 rupees as tax. But now, if you assume that 12 lakh 10 minus 61,500, your income goes below 12 lakhs. So government is cognizant about the fact that even under the new regime, the tax could be steeper if you have just marginally over 12 lakh rupees. So they are saying in such situations, the maximum tax you should pay is that you should be able to carry home 12 lakh rupees at least. So they are giving you certain relief, which in this case, in this example, is you have to only pay 10,000 rupees tax, you are getting a relief of 51,500. So essentially, the good news is we all have the 12 lakh exemption. I've tried to articulate this through some examples, but I'm not going to spend time. This is numerical calculations. So I'm moving ahead. This one is a very important one. We have a large business diaspora here, so we should know about this updated return. I think this is something which came out in 2022. One of the most brilliant changes in an Indian ecosystem from a return filing and assessment standpoint. This essentially says, if for any reason the taxpayer realizes that he or she or the company has not paid certain taxes rightfully the government owes, you can go back and update your return and pay additional taxes. It comes at a cost, but it keeps away the whole aspect of litigation away from you, which is one of the biggest thorns in our income tax ecosystem. So let's go through the dates of what are the various dates that are available. I took the individual as an example because we all have individuals here. So the original return that we all individuals need to pay who are not subject to audit is 31st July. The revised return that the same individual can file, revises, you want to make some changes, you can revise it, the government allows you to do that. That's another 6 months, so 31st December. Belated return, again, whoever has not filed the return within the deadline can file a belated return, again within 31st December. Now beyond this, nobody could have gone back and updated the return till 2022. Now government says, I'm not just allowing 1 year, but I'm allowing 2 years of updation that you can do. And now in this proposed budget, they have increased the time limit to 4 years. So technically, for 25-26, you can update your return up to 31st March 2030. That's a huge leeway. Of course, it comes at a cost. The cost here is, if you are updating your return within 12 months, you have to pay the tax plus additional income tax, which is 25% of the tax. So if your tax comes to 100 rupees, you will pay 100 plus 25% of 100, which is 125. If you are updating between 24 months, 12 to 24, you have to do it 50%, and so on. The 60 and 70 comes in for the balance third and fourth year. Very crucial, facility. Since 2022, almost 9 million taxpayers have utilized this and done away with a lot of litigations. So something which is very clean, there is no iota of suspicion. If you go and tell the government is ready to accept, of course with a certain cost, and move forward. If at all there is any such situation, take use of this facility and reduce your litigation, is the only thing that I want to say. Some other amendments, the key ones let's talk about. I'm not getting into AIF, REIT and InvIT. I don't think that may be relevant here. ULIP is an important one. I'm sure we'll have people here who would have invested in ULIPs, unit linked insurance policies. There was some amount of ambiguity. What is the taxation of ULIP? Now there were two schools of thought before this budget. Because in some section of income tax, which is 112A, equity oriented mutual fund is defined, which includes ULIP. But at the same time, ULIP is not an equity instrument. It's an insurance which invests into equity instruments. So can I tax ULIP under equity oriented fund, or should I tax ULIP redemption as IFOS, income from other sources? The government has come out with a good clarity that ULIP will be treated as equity oriented mutual fund, and hence you will follow the equity oriented mutual fund taxation. Now again, all ULIPs are not taxable. Only those are taxable which either the premium is above 2,50,000 rupees, or your premium is more than 10% of your total sum assured, or nay and. So that's something that we have to keep in mind. So if you are exempt, you don't need to worry about it. But if you are taxable, then law has come out very clear that you are taxable under a specific provision, which is equity oriented mutual fund. Now coming back to the other provision, which is TDS, TCS, it was but natural when a slab rate increases, the TDS provisions and TCS provisions ought to change, simply because the taxation itself structure has changed. So they also changed TDS, TCS, simply because taxable limits have increased. So even TDS, TCS has to change. So it's a corresponding impact. I'm only talking about the key ones. I'm not going to spend time on TDS. Senior citizens have given a good relaxation in various interest, etc. But let's go to TCS. TCS here is very important. About two or three budgets back, TCS on LRS was introduced. So liberalized remittance scheme is a scheme through which families, individuals can remit money overseas. Government saw the money that was going out was lock, stock and barrel. The last I remember in 2023, the money went out was $27 billion under LRS. 2024, it was $31 billion, all RBI figures. Now they wanted to track who was sending this money. And normally tracking comes at a very small TCS cost. It used to be 0.5, 1, 2, 3. This government made it slightly different. They applied a 20% TCS, which is humongous. TCS is nothing but advance tax. So whatever you pay as TCS, you can claim it as your advance tax. So you pay your self-assessment tax reduced. Now TCS on LRS was 7 lakh rupees. There was a significant request from a lot of families that it should not be 7 lakhs, it should be slightly higher number. We all expected the number to at least to be 14 lakhs, but never mind, we have got an increase which is in the range of 10 lakhs. So good start. So LRS remittance up to 10 lakhs is now exempt from a TCS standpoint. Beyond 10 lakhs, of course, LRS will be subject to TCS. There are multiple rates for TCS. For example, if you're simply remitting for travel purposes or investment purposes, you end up paying TCS at the rate 20%. If you're doing it for, let's say, anything in the area of education, the TCS rate is different. Now, there used to be another significant complication in TCS where, let's say I'm selling shares of an unlisted company, I'm a promoter of an unlisted company. There were two provisions in law which was applicable in one transaction. So one, there was a TDS deduction on the sale of shares as well as a TCS collection on sale of shares. So one transaction had two implications, one on buyer, one on seller. Now government has come out and said, on sale of shares, we will not apply TCS at all. Henceforth, sale of shares or sale of goods, only TDS provisions will apply if the purchaser has total income above 10 crores and if the transaction that is happening is above 50 lakhs. So it's a welcome change to reduce a lot of unnecessary conversation between buyer and seller. If TDS is applicable, if TCS is applicable, evaluation and risk around that. So it's a good welcome change. Other key amendments in the context of this budget, they have clarified self-occupied property issue. Now self-occupied property under section 23(2) of the Income Tax Act simply says, if you have a house in which you are living or you are not in a position to live due to reasons of employment. So for example, you have a house in Bangalore but you are employed in Bombay and this is the second house, you are eligible to keep that as self-occupied even though you don't live in it. Of course, the assumption here is you have not rented it out. If you rent it out, you'll have to pay rental income from other house property. But the government was deeming that if you have kept any house vacant, more than 2 houses, you need to pay a deemed rent. But the second house allowed as a self-occupied property was with a condition that you should not live in the house due to the reason of employment. Now there was a lot of litigation around this because people used to live, let's say, in the outskirts of Bangalore, they used to have a house, but the office is in center of the city, MG Road. They used to leave that house and come and stay near the office space here. And that house, Income Tax Authority was not allowing as self-occupied because it's in the same city. They used to argue, what is the reason of employment? The houses are next to each other. It used to be a frequent litigation. The government has come out and said, self-occupied for 2 houses, you don't need to justify any reasons. Reason is up to you. If you occupy and the other house, whatever reasons, till the time it's not rented out, will be assumed as not taxable as deemed let out property. So it's a welcome change again, a good change for taxpayers. Startups, we have a lot of families who are doing businesses here. If you ever think of doing startups or if the next generation is starting to engage into a startup, there is a section called as 80IAC, which is essentially saying startup income is not subject to tax for 3 out of 10 years. You can choose the 3 out of 10 years. Typically the first 3-4 years are loss making, so that's why they've given a big window of 3 out of 10 years. Now, it's not taxable. The only condition was still about this budget. The company should be incorporated before 31st March 2025. Naturally, they want to promote the startup ecosystem. So the government has extended this date for another 5 years. So this company should be incorporated before 31st March 2030. It's a welcome change again. Carry forward of losses, a significant one in the M&A space. If you have any tax losses entity within your group, and if you want to merge, so in good old days, or rather even today as the law exists, company A loss making, company B profit making within the group. Normally what people think, A should be merged with B, rightfully so. Subject to certain conditions, the loss will set off against the gains and you will pay reduced tax. Very, very regular tax planning, and every other group does it on a day in, day out basis. Now, as per the current law, the losses were evergreen, which means on merger, although let's say you are on the 7th year of carry forward losses, which means you have already had loss 7 years back, you can only carry forward for 8 years. If you merge this company in the 7th year under the existing provision 72A, A for Apple, it says you will get the fresh lease of 8 years to carry forward the tax losses. So now government has said, we don't want to give you a fresh lease. What is pending from your original loss-making entity is all that you will be able to carry forward. So if you have already spent 7 years pre-merger, what you can set off is only the balance 1 year. If it's not set off in that 1 year, tax losses are lapsed. And the last but not the least, with the request I started, I expect the new tax bill to be placed in the parliament this week. Madam Nirmala Sitharaman made that statement earlier when the budget was there. The news articles state that post Delhi elections, which I believe is tomorrow, I think we can expect this bill on Thursday or Friday. It is going to be interesting. I have seen the direct tax code drafts when UPA 1 and 2 had made. It was very interesting to read a new legislation being built, and I think we are going through the same journey in very near future. It looks like this law will be up for comments. It will go to standing committee. Industry lobbies like Sindhi Chambers of Commerce will also get a chance to represent and make changes as per your requirement. My suggestion, as you already are reverting on Bula Act is by the way very important. A lot of South communities also take care of Bula, Marwadi group, all of that do unregulated lending. Like in the same situation, we should also comment on this bill, make it more robust. Government has promised it will simplify it. Current Income Tax Act has 298 sections with 23 chapters. Finance Minister on the floor of the Parliament said she's wanting to do it half. So let's hope, even if not half, if it is 18 chapters, we achieve a big task. So we look forward for this change, and which is a landmark change that is happening in coming few days. So with this, I end the budget part. I will just go ahead with stake sale, provided I have time to talk about it. 2 minutes. 2 minutes? Okay. So let me just talk about stake sale very quickly. I think more and more as wealth managers, we are coming across and seeing a lot of stake sale happening. So every second, third week, there is a large stake sale, which essentially means families have started to monetize their biggest asset, which is their business. They started to sell it as part of an IPO journey or as part of a private sale. It's happening every day. We all are reading in newspapers. What are the key things that we have to keep in mind from a tax standpoint? Of course, if you're selling an unlisted shares, the sales consideration is going to be the fair market value, which two independent parties agree. There is no science to it. If you are holding shares more than 2 years, it is long-term capital gain. If it is less than 2 years, it is short-term capital gain. Long-term capital gain is taxable at the rate 12.5. If it is an individual, it will end up to 14.95. It is 12.5 plus 15% surcharge and 4% cess. If it is short-term, it will be applicable as per your slab rates. The 20% rate is only available to listed securities, not to unlisted. Hence, it is slab rate. Indexation benefit has been done away with. The only indexation left, or rather two indexation situations are left in the Income Tax Act. One is you have an option to index if you sell a residential property. And second is you have an option to index it if you are selling it as part of an offer for sale in an IPO. These are the only two indexation situations available now. No more indexation available. Now this one is something that I want to highlight. Many clients miss it. Please consult your CA. The law says if your company is prior to 2001, I repeat, the law says if your asset, that is your company, your shareholding is prior to 2001, then you technically can fair market value your asset as on 1st April and bump up the cost. So let's say all of us who are entrepreneurs will have a cost which is insignificant. We started a company in 1990, the cost is let's say 10 rupees. But the law says 1990 cost is 10 fine, but 2001 you can replace the cost with the fair market value of your asset as on 2001. Sometimes if your balance sheet and if your financials in 2001, 2, 3, 4 was more than what it was in 1990, there is an ability to step up cost. It's a good planning opportunity within the realm of income tax. So please do understand this. Happy to chat separately or talk to your CA. So you can bump up the cost. To the extent of bump up, there could be some tax saving. Of course, the last but not the least, what are the ways to save taxes is very minimalistic. Law is very stringent now. All that you can do is buy a house for 10 crores under 54F or set off of any capital losses you have in any other asset that you own. Beyond this, I jokingly say we should have the platinum certificate issued by the government and be happy. So that's it. Thank you.
About this presentation, I would like to say it was so brief so concise, and so relevant to our audience. Thank you so much. Very rarely do we get a chartered accountant give a presentation which is so relevant to the class of audience we have. So I really appreciate and thank you so much.
Thank you, sir.
I would now open up the audience for any questions which you may have. Anybody with any questions, please? I think it was so brief and concise and so lucid that there are no questions to be asked. Can somebody pass the mic back?
Hi, good evening to you, Venki.
Yes, sir.
Can you kindly elaborate a little bit on no TDS for senior citizens? I would like to know more on that.
Sure. I think, sir, some key provisions. So, bank FD, there was TDS beyond 50,000 rupees. Now they have increased to 1 lakh rupees. So, all the existing limits of TDS have doubled for senior citizens. So, that's simply because the slab rate has increased. So, automatically they are doubling the TDS rates. So, again, TDS is deducted by the payer to you, which can be a bank, which can be, let's say, any other NCD instrument that you are subscribing to. So, all of that has increased. For example, if you have rented flat, the earlier TDS exemption was up to 2,40,000 rupees. Now they have changed it to 50,000 per month. So these are the sizable changes, which is FD interest from 50 to 1 lakh, rent from 2,40,000 to 50,000 per month. So these are the sizable TDS changes. It will help you in cash flow, but eventually you will still look at the 12 lakh slab rate and other things. Okay, thank you.
Thank you.
Anybody else?
Any changes in taxation, on purchase of property from NRIs and outsiders?
Nothing, sir. Nothing at all. So if you're purchasing property from non-residents, as a purchaser you need to comply with the 195 deduction, which is typically the capital gains tax rate you pay. The only thing that you have to be worried about is if you can get a CA certificate or at least a tax clearance certificate. If you get one of them, you should be in a position to go, but there are no changes in the current law.
I have a question on the budget, not on the finance bill.
Sure. Budget. So if it is non-tax, I'm not the right guy, but maybe Vikas sir can answer it. I'm passing on the baton.
Hello, sir. All the way in the back. I'm an NRI who was having problems to figure out the succession part.
Okay.
Because all my seniors have passed away. Only left is my mother at 85, and she does not know how all this is done. So I need some help. I will talk to the lady who asked.
Sure.
Thank you.
Yeah, Ruchi, you can meet Ruchi to discuss this. Perfect.
That's it? Okay. Thank you so much. I would request you to stay on stage and receive a small token of appreciation from our treasurer, Mr. Vishal Asrani.
Sure.
And he incidentally is also a CA, from a CA to a CA. And now for the big one. We are all ready? Okay. So first of all, before we start, I would call upon the man with the royal touch. I think all of you all know who he is, the man with the royal touch. The one who always endeavors and delivers the best speakers in the best setups and innovative events for the members of the Sindhi Chamber of Commerce. Our past president and chairman, lectures and programs, Mr. Suresh Bhatia, I would request him to come and introduce Mr. Vikas Khemani.
Well, good evening, friends and fellow members. It's always a pleasure to introduce a prominent figure from India's financial sector, someone with over 2 decades of experience in the financial markets. When 361 approached me to suggest a speaker for the Sindhi Chamber of Commerce, Mr. Vikas Khemani's name came to mind immediately, and we are very happy to have him with us this evening. Born in a small town in Rajasthan, Vikas began his journey by assisting his grandfather, a cloth merchant, in his business at a very young age. He later became a chartered accountant. He studied in India, and a CFA from the USA. For 17 years, he served as the CEO of Edelweiss Asset Management, where he led institutional business and equity research. During his tenure, he played a pivotal role in nurturing entrepreneurs, in incubating and building their businesses, several of which are leading companies today. In 2019, Vikas founded Carnelian Asset Advisors, which has grown exponentially and now manages over 11,000 crores. He is actively involved with various industry bodies like CII, National Council, FICCI, and has received the Young Professional Achievers Award from the Institute of Chartered Accountants. Rated as one of the top fund managers in the country, 2 out of his funds were ranked amongst the best top 10 funds in the category 3 AIFs in 2024. While his professional achievements are remarkable, there is much more to Vikas beyond finance. Vikas is passionate about 3 key areas: the India story, financial markets, and Bangalore. He loves to visit Bangalore. He has a lot of friends over here, and I understand from my sources that he's invested in a golf course close by. An avid poker player and a fitness enthusiast, he has been participating in marathons for over 15 years. Vikas practices yoga and Vipassana meditation, which likely contributes to his positive outlook even during difficult times. He is married to Swati, who holds directorial roles in several companies and supports him in his asset management business. Ladies and gentlemen, please join me in welcoming Mr. Vikas Khemani.
Good evening, ladies and gentlemen, Mr. Madan, Mr. Bhatia, Samrat, Saji, everybody. Thank you very much for inviting me to be amongst all of you. Of course, it's not surprising when it is a money talk. Hall is full of Sindhis, so at this hour. But I know I'm conscious of the fact that I am in between you and your drinks, so we'll keep it short and crisp and to the point. But thank you very much once again. I always, like I said, Bangalore is one of my favorite city after Bombay, and I love coming here, and more importantly, after I invested into Zion Hill Golf Course, which is close by. And Mr. Chabari has a house there also, so I don't know where he's sitting, but he has 6 houses there, he was telling me. So it's a great project. Visit there over the weekend, you will love it. Again, the topic is to talk about budget. Before I start talking about budget, I can only say that we are the only country in the world where so many of us sit and listen to the budget 2 hours, 3 hours, and then debate about it post that. Nowhere in the world it happens. But anyway, nevertheless, it's been a tradition for I think decades. But the only thing is that over the years, especially in last 10, 12 years, the significance of the budget has been coming down. And why is that so? Earlier, budget was the only occasion where government made a lot of changes in the tax, policies, everything once a year only. And in fact, if you remember, we used to have railway budget. So one day of, huge talk on railway budget, and today railway budget is not there, we don't even talk about. So actually, budget is nothing but just how we make our revenue and expenditure statements and all. And what has happened in last 5-7 years, especially after 2014, most of the policy announcements have started happening through the year. You don't have to wait every year in February to announce budget. So budget in some sense has got reduced to only 3 or 4 things, and which is what broadly gives you indication what it is about. Number 1 is about what is the expectation of the revenue collection, right? How government is thinking about the revenue collection, right? So this year, if you've seen, they have expected to collect about 12-13% growth in the revenue. That gives you a bit of indication that where the money is going to come from, how government is thinking. And second is expenditure, how government is going to spend, right? Now, that has a little bit of nuances, capital expenditure, how much is going to be on investing side, how much is going on the salaries and paying of the interest. And resultant figure is the fiscal deficit, which has a little bit more implication because fiscal deficit determines the borrowing, because how does government fund the fiscal deficit? By borrowing. So how much government is going to borrow from the market, right? And lastly, broadly, if there are any direction which government wants. So if they want to channelize certain policies, so they kind of make announcements like this time around, they have done FDI in insurance has gone to 100%, those kind of things, right? So these are broadly 4 areas of, now earlier, the excise duty used to be a very big part of it, and every change would happen from there and all. All these things have got out, and GST council meets every month, changes happen and things have gone out. The only tax change, which is direct tax change, which happens through the budget, which is once in a year, right? So if you see in last 10, 12 years, government has reduced the importance, but at the same time, I think these 4 counts, this budget, you must have heard, from various things, budget is magic budget, bonanza budget, all kind of, why it is being said like that, right? Why everybody feels, I think the biggest benefit is the tax reduction, which we all know that we all are businessmen, we all earn, and we want to pay as less tax as we, right? And that has been a very big sentiment booster, very big positive booster. But, and I will weave something around the markets also in this. Now everybody has cheered about, tax reduction will lead to consumption. 1 lakh crores has been left into the hands of the taxpayers, which is good, no doubt about it. But it's not going to, unlike all the TV media talks about, it's not going to boost consumption suddenly overnight. And just think about it. We can commonly understand, let's say, I'm sure there are a lot of taxpayers sitting here, not in that bracket, but if somebody saves 10,000 rupees of taxes, he's not going to buy extra soaps and toothpaste and all those things, right? But this is how markets work today. Most markets have cheered up and stocks are up 15-20%. I think all these things will sort of settle down very soon. So what happens is around budget, there is a lot of hype, and hype creates a lot of noise and reactions in the market and all those things. So my experience over the years of seeing budget, especially in last 8-10 years, in a week's time, all of us will forget budget. We'll go back to the normal stuff, normal corporate earning, normal market, what's happening. So budget is just an event. We should take this in a very light way, according to me, right? So consumption is the one which is going to have, if suppose, let's say 1 lakh crore is coming in the system, some people will pay their loans, some people will buy some goods, some people might buy houses, some people might invest, in share market. So this is going to get distributed. But good news is that it is going in the hands of, people, which is a great thing. Because also one must understand that today, other narrative which is there, government has not put so much money on capital expenditure. And again, in my opinion, it is not a very right narrative, right? If you see in last 5 years, especially post-COVID, government has doubled the amount of money they has been spending on capital expenditure. For 4 years, you've been spending double the amount of money which you've been spending all these years. Now, there is always a limited capacity you can absorb in building infrastructure, right? It's not only allocation of the money, it's also ability to execute, implement and spend that money, right? And that's not easy. It's like how much of the infrastructure, road, ports, airports you can build, but there's a pace. Right? So government in last 4 years has significantly stepped up. Last year we saw a little bit of slowdown because of election. Implication of that, all of us know how some of the stocks didn't do well. So there's a capacity constraint. By just providing amount in the budget does not mean that it will go into the economy. It has to be actually executed, spent and all those things, right? And if you spend on unproductive assets, it has a very different problem. Think about our neighboring country. Most of you must have heard, China has built roads to nowhere, ghost towns, in their order to spend capital expenditure. Now today all of them are, being destroyed. Road to nowhere, you can build road that can create that can boost your short-term economic growth, but that's going to create a later problem in the balance sheet of the banks and the people who invested into that, if those assets are not going to generate productive assets. So capital expenditure, government has done enough according to me and is doing more. Plus, in today's time, government balance sheet is not the only way to fund capex. Today roads are being built. Who's paying for that? All of us are paying for that. Why do we need government balance sheet? When airports are getting built, we all pay user charges. Government is not funding them. So the infrastructure is also getting built outside the government, budget. And that is also happening at a very, very rapid pace. Whether it is roads, railways, ports, airports, metros, every part of the country we are, So the narrative which is being made that, oh my God, investment cycle will halt, it's actually, not going to happen. It's not something to worry about it. So these are the two major narratives if you see of the budget. But more credible part of the budget is that our fiscal deficit has been reduced. Generally speaking, everywhere in the world, we are the only country in the world where fiscal deficit is coming down. We are managing it so well. And there are no hidden items, right? It's like all of us are, and when you're talking to a Sindhi community making balance sheet, all of you are familiar, right? That ghata, fiscal deficit is ghata, right? Now, if government is reducing that, it means they will borrow less. When they borrow less, where that money will be available? That money will be available for the banking sector, will be available for the private investment. So, government borrowing less is not bad thing. And again, this government has brought significant discipline in the fiscal deficit side continuously, and they are walking on the path of fiscal consolidation. It's a good thing. If you think about it, 10 years down the line, if India GDP becomes $10 trillion and broadly 10-11% tax collection is the rate, India will have a budget of $1 trillion. It's very hard to spend $1 trillion. Very few governments can spend. So I see a situation where our fiscal deficit will keep coming down, and thanks to the government, that opens up a lot of other parts of the economy very well. Other thing which has got hidden, not so well appreciated, is the subsidy. All of us have been worried about the freebies and subsidies which government has been giving over the years. In this budget, the subsidy provision has gone below 2019 levels. Now that's a great thing, right? Government is saying, I will do, in an environment where every political party is ready to outdo freebies. Every political party is only trying to say, ye free, wo free, right? In that kind of political environment, if government is taking a step towards reducing subsidy, it's a great move. So what net I'm trying to say is that it's a very credible budget. It's a very thoughtful budget. Just like how a businessman will prepare. You keep everybody happy, leave money in the hands of, taxpayer, provide money for the growth of the investment cycle, give required benefits for, they have done in MSME, farmers, everywhere. I think, one of the, again, was not talked about, India imports large amount of pulses, right? Because for a vegetarian society, that's a very big source of protein, and we don't produce as many pulses. Government has provided that much money to make India self-reliant over next 5 years. And so these are lot of things government certainly doing, PLIs for the manufacturing, they are doing to make India self-reliant. So there are lots of things, which may not be relevant in some sense being talked about in detail. But the message I want to leave here is that this budget is very good. No need to worry about some of the negative which are being talked about, capital expenditure and all. Nothing is going to sort of change. Some of the policy initiative which has been taken, tax, of course, my friend talked about in detail. I think the only thing probably you missed which is relevant for this audience is the reduction in the surcharge. Now surcharge is kept 25%, right? That's new, okay. So anyway, a lot of benefit, that will happen this year, right? But so all of you will benefit from that, so that part is good. But I feel that in next few budgets, probably even the surcharge should further come down. So as you have more and more compliance, I think government reduces the tax, and that is how things go. So I would say from budget perspective, we are quite happy. At least initially there was a knee-jerk reaction. Partly I think it got reflected. I was worried that if today markets were down, I wouldn't have audience here sitting here listening to me, but thankfully markets were up. So we have a lot of people sitting here. So markets in some sense gave a cheer up to the budget. But again, I really don't sweat too much about budget, to be honest. When Samrat called me, I said, budget pe kya baat karenge yaar? It's just a few days story. So more importantly, I think happy to chat on sort of how one should look at India. I don't know, Samrat, I'm happy to look at markets and talk about it, because budget, to be honest, it's fine, it's good. Net, very well done. The only other good news is that it's probably one of the first budget where there were no negatives in the fine prints. Otherwise, there was always some hidden negative in the fine prints. So that way, this government has constantly created credibility. If you remember, 10 years ago, there were a lot of off-balance sheet items in the budget. The petro bonds. So actually, fiscal deficit was not fiscal deficit, but they would have some carve-outs which were not counted in fiscal deficit. Here, whatever is there in the budget, there's no hidden item, nothing, which is where I think government has walked towards having this one document as a very credible piece of paper, piece of planning, and that is, I think, is very, very good. Now, coming to, I think, let me talk about markets. Right? I think that's probably more exciting and more interesting, because I think, frankly speaking, short term makes no difference. Most of you are long-term investors. Most of you think or investing from a long-term perspective, intergenerational wealth, and that matters a lot. And I think current environment, whatever is going on, I think that gives a great opportunity to see how India, to get opportunity to invest from a long-term point of view. So it's very important to understand how should we see India, right? From a 5-10 years perspective, right? It really doesn't matter, honestly speaking, next 3, 6 months, 12 months doesn't matter from a long-term perspective. So let me build a slightly wider perspective, and then I'll be happy to take relevant questions in your mind. So I think India is going through a very, very big transformational phase, which has, in my career of 25, 30 years of investing, I haven't seen such kind of transformational phase which India is right now going through. And what do I mean by that? So if you see, India 300 years ago, 400 years ago, we used to be called Sone ki Chidiya. Our share of GDP was, in the world GDP was anywhere around 20-25%. So was with China. But during the British Raj, that 20-25% share of GDP came down to 2%, 3%, same thing for China. We lost our entire prowess, entire, the global prowess which we had. Same thing happened with China. China embarked on that journey almost 35, 40 years ago. India embarked on that journey meaningfully in last 10 years, And why do I say that? Because, and as all of you know that, Prime Minister also has given a call that Amrit Kal, by the time India turns 100, we will become developed nation, right? So what is likely to happen? So today our GDP, total India GDP is little less than $4 trillion. Now if what we are basically, what are based on the projection of 6-7% GDP growth, by the time Amrit Kal ends, which is 2047, India GDP will become $29 to $30 trillion, right? So almost from $4 trillion to $30 trillion, 7.5x of where we are as a country. Right? Our per capita income will go from $2,500 to almost $18,000. Our world share of GDP will go from 4% to 16-17%. These are the very, very big, sort of trends. But more importantly, one can say that, why do you think it will happen this time? Right? What is the reason for you to believe, this will happen? Right? Now, first of all, if you see in last 10 years, lot of foundational work has happened. We have built solid foundation of in terms of lot of reforms and transformation. What are these? Number one, we have carried out long pending economic reforms. GST, IBC, RERA, so many, all of us know when GST was introduced, how painful it was. Today it is one of the most talked about legislation in the country and around the globe. So, a lot of economic reforms have been carried out. Second, our digital platform, which we have built, is again unparalleled in the country, world, but through which we have done DBT, UPI, so many digital, today, what kind of digital stack we have built is nowhere in the world. Again, I'm telling you, countries like US and Europe are far behind. There's no comparison. And at fraction of the cost, right? So our digital platform is helping us to take away inefficiencies. Imagine how much money was going waste in subsidies. Today, it is getting to the right person in a right quantum, avoiding leakages, and that much money is available for the development of the country. So that digital stack is a very, very powerful, thing which has been built. And third, we have built huge infrastructure, reforms, right? Again, rails, road, railways, ports, airport, everything is being built at a speed which we have never built, right? So the foundation is ready. But while this foundation is being built, some tectonic shifts have happened in Indian mindset. And if we understand what are these mindset change which have happened, you will start understanding, change in the India story. And that is the real power of what are these tectonic shifts in the mindset of India. Let us understand that. Number one shift which has happened in the mindset of Indians is we were moved from incremental mindset to exponential mindset. No more we think that we will take 20 years to address a problem, 30 years to address a problem. We are here to address everything, banking for all in 3 years, power for all in 5 years, housing for all in 5 years. Even when you talk to private sector, people are doing capex in next 5 years, more than they have done in last 50 years. So everybody is thinking exponentially, not incremental things, what we used to call Hindu rate of growth. Not the case, right? Second big change which has happened is India has moved from constrained mindset to non-constrained mindset. What do I mean by that? We all know that we were told India is a poor country, hum garib desh hai, right? We all have grown up hearing that. Famous 2012 A.K. Antony statement in parliament, we don't have money for defense. Do you remember that? Most of you would remember that, right? Today, do you hear that? We don't have money for, you don't hear, we have money for world-class airports, world-class infrastructure, we have money for social welfare. Same country, same people, same resources. Mindset change happened that we will build world class and we will manage resources. This is a huge economic ramification. What you used to grow, if I believe that I don't have money, how will I invest and how will I take risk? But if I believe that I will manage everything, that's a very, 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 very big change mindset of the Indians and Indian government and Indian people. And that has a huge economic ramification. Number 3, historically, whenever India faced a problem, we will look towards West. UN, World Bank will come and give us solutions. If you remember, 92 crisis happened. World Bank gave us a plan. Whatever so-called Manmohan Singh budget was actually a plan given by World Bank. And we just implemented. Right? Today, no more the case. India has found its confidence to find solution to its own problem, its own way. We don't get bullied by the West. COVID happened, they bullied us for the vaccine. We didn't take, we built our own vaccine. UPI, many such examples if you see, we say we will find solution which suits to our country in our own way. And we are in fact other way now giving solution to others. It is again a big change in mindset, right? Fourth, we are innovating at a scale and a low cost. We are not, telecom is a classic example. Less than $2 unlimited data on the phone is nowhere in the world, including China. This is again huge implication because so many people get plugged into what access I have, somebody poorest to the poor in a village has same access to the information. It has again huge implication on the growth. Fifth, historically we were taught only 2 models, socialism and capitalism. India has beautifully experimented in last 10 years that social welfare and development are not at odds with each other. It can coexist and they are good practice. And we are experimenting with all the India has lifted 25 crore people out of poverty. Unprecedented in human history. We don't realize because we don't belong to that class, but when you go and see, it is a huge implication, right? That's the power of India, what we are trying to experiment. And last but not the least, is when it comes to global stage, we don't sit in any corner. We sit at the center stage, driving the agenda, Modi ji ka photo center mein hota hai, right? Everywhere, and we talk to a lot of bureaucrats when they say that earlier in global conferences, our table would be in the corner. Now our table is in the center because everybody has realized the power of India. And when your leadership gets respected globally, again, unki baat mein vajan hota hai, so then people listen to it. It's like one pharma company CEO was telling me, I was just generally chatting, he said, I was in Egypt. And Egyptian Prime Minister told him that you tell me what all approvals you need, I will get it done quickly because I promised Modi ji. So that is how, and that has economic implications, right? So all these big change in the mindset, see, mindset change is what carries out us in a long term, right? So these mindset change are going to propel India into that next league. And once we understand that, then we start looking at India in a very, very different line, different perspective. All these changes will lead to India in 3 things. Strength, scale, and speed. We are the most populous nation on the planet. We are the youngest nation on the planet. And we are the most aspirational nation on the planet. These combination of these three things will drive India in a big way. And most of you are investor, many of you are investor. If you see, in last 20, 30, 40 years of history, think of a company which has created big wealth, company. You will find three common things in those companies: strength, scale, and speed. Study them. Same thing is happening at the country level. So India will create huge amount of wealth, economic prosperity over next 10, 15, 20, 25 years of this journey. And that is what the real power is. And everything else can be taken away from us. One thing can't be taken away: our demography. India is the youngest nation. We are 28 years of median age. China is 38 years, which is our closest competitor. Japan, Europe, ke to baat hi mat karo, but China is 38 years of age. Now, China is going through a very interesting social problem. They had a one-child policy 20 years ago. Because of the one-child policy, one working couple has 6 dependents, 4 parents and 2 kids now. That is a huge, I mean, on a working couple, 4 ailing or 4 old parents, and it's a huge, right? It's going through its own problem, right? But we are 28 years. We will remain youngest for next 50 years. We will provide 25% of the world's working population over next 20 years. 2/3 of our population is working population. So many people work, consume, that is GDP, that is growth. So this can't be taken away. Of course, an enabling environment which has been given, which obviously unleashes the energy in far more bigger way, far more better way, which is what is happening. So I think this environment is, I think, propelling India forward. And that is how one should look at India. Now, since all of you are numbers and say money ka baat karo, so let's talk money. What can happen? You know, this is all English. Let's talk money. Total corporate profit, sara nafa, right? Last year of India, sub company ka nafa was $150 billion. In 2001, it was $8 billion. 2001, $8 billion. Last year, it was $150 billion. In 20 years, 8 to 150. इस period में UPA 1, UPA 2, global financial crisis, 3G scam, coal scam, fragile 5, demonetization, ILFS crisis, GST implementation, pandemic, Ukraine war, Israel war, whatever you can think, everything has happened. Despite that, India's corporate nafa went from 8 billion to $150 billion. ये तो हो गया history. Now let's look at forward. By our estimate, ये थोड़ा आगे पीछे हो सकता है 1-2 साल, but by 2035 or maybe 36, this $150 billion will go to $1 trillion. 150 का 1000, $1 trillion. So almost 5-6x from where we are today because of this accelerated journey of growth. It means at $1 trillion, even if you take modest valuation, our market cap of India will be between $20 to $25 trillion. Today it is $5 trillion. अभी शायद थोड़ा और कम होगा, मतलब depending on how markets are, but little less than $5 trillion. So over next 10-12 years, our journey of $5 trillion to $20 to $25 trillion, 4 to 5x return in this period. This is at the market level. If people like us do little bit more, through 3-4% more than the market, you can make 5-7x of money in this period. And of course, it's not stopping, it continues. By the time, so my limited point I was trying to, so it means Nifty today is what, 23,000-24,000, whatever that number, I don't know how it closed today. But if you just take 4x of that is 1 lakh, 5x is 1 lakh. So Nifty is going to be anywhere between 1 lakh to 1,25,000. That's the kind of journey. So when people ask me, 23 पे इन्वेस्ट करे कि 24 पे करे, कुछ फर्क पड़ने वाला है? If that's your journey, if that's your target, that's your horizon, कि आप 23 पे करो या 24 पे करो, Samrat, I'm making your life easier because I'm sure that's the most question you get, कि कितना कभी डालना चाहिए, right? अभी करें, थोड़ा टाइम बाद करें. It makes no difference if your horizon is light. And I'm assuming most people who invest money, in this room, and it's intergenerational money, long-term money, which is, if it is short-term money, of course, you have to take a lot of views, and if it is, but generally speaking, I think What misses is actually money long term ही होता है, mindset is short term. And by understanding, having this perspective, you change your mindset from short term to long term. Because most of the time people end up believing, ये peak हो गया क्या? ये peak हो गया क्या? That's a common question. Will it, is it 2008 kind of peak? Is it Harshad Mehta kind of peak? Those kind of questions. So when you have the clarity of the journey, when it is happening, then when markets are bad, you don't get panicked. You actually either stay invested or you put more money. That is that's the one perspective one should have. Final word on the risk, right? Very often, very common question, what are the big risks, right? Risk will always be there. My simple fund down risk is risk always comes from the source you don't expect, and it always comes unannounced. So you can't predict risk, you can only sort of plan for it, and you say if risk comes, I should be able to remain unaffected. I should not have a bankruptcy kind of situation. So that's for the leverage player. But the point I'm saying, you can't predict risk, but risk can come anytime. So in India, if you see last 20, 30, 40 years of history, see, nobody is worried about 10% risk. I think most people are worried about 30, 40% risk. Can it be 2008 kind of crisis, right? That's a big risk which all of us have to model and budget, not the short-term risk. In India, in last 20, 30, 40 years of history, the big risks have come only from 5 sources. And if you study them or talk about them, you will know where we are. Number one risk always comes from current account deficit. Current account deficit meaning we import more, we export less. So the balance is negative. So how do you fund current account deficit? कि आप import ज़्यादा कर रहे हो तो you get capital flows from abroad. FDIs is commonly known, right? So the moment current account deficit is high and FDI flows slow down, our currency comes under distress, inflation goes up, our economy goes for toss. 2012, if any of you remember, we became part of fragile 5 countries including Brazil and all those things. Our currency has depreciated in a week 20%. Raghuram Rajan had done that urgent bond issuance to save the kind of crisis of $3 billion. That time, our current account deficit was 4.5%. Today it has come down to 1%, and in next 5-7 years, thanks to the initiative taken by the government to do Atmanirbhar Bharat, lot of focus on manufacturing, import substitution, which I am sure all of you here read, talk about how are we reducing our imports and focusing on exports. This current account deficit will become surplus in next 5, 7, 8 years time. So we are structurally getting repaired in this. Only 5 countries in last 50 years have walked this journey. Japan, Korea, China, Taiwan, and India will be probably 5th. Only 4 have done. So this is a very big change, weakness is repaired and we are moving towards strength. Number 2, fiscal deficit. Whenever fiscal deficit goes up, government borrows more, cash constraints happen, which we just spoke about in this budget, how this government has consistently been fiscally responsible, and we are the only country in the world whose fiscal deficit where it is. Third, banking system. Whenever our banking system goes, there's NPAs, it goes for toss, right? I mean, whether it was 2001, 2008, 2012, NPAs goes up, banking system struggles, economy struggles. Today, our NPA at 0.5%, again, unprecedented, never happened in the history and nowhere globally. Our banking system is one of the most safest, solid banking system. So risk will not come. Fourth is inflation. That whenever inflation goes out of hand, we must have heard the crude price goes up, and why people worry about war? Nobody cares how many people are dying. People are worried because oil price will go up. As simple as that, right? This time around when the Ukraine war happened, oil price went up. Why we didn't feel the inflation? Because we imported Russian oil, right? Every country, ask people who lived in Europe and other parts, how they struggled with inflation. So there is a saying that it is very hard to put value to the accidents avoided. जो हुआ ही नहीं उसका value कैसे पता चलेगा? Because we didn't face that problem, but पूछो उनको जिनके साथ क्या हुआ, right? So this government has done a great job in managing inflation in a very tolerable range, which we all don't feel. And the last, our debt to GDP, corporate debt to GDP. Again, leverage. Jada loan, jada risk, right? Today, our debt to GDP is lowest in the world. And we are the only country whose debt to GDP has come down post-global financial crisis. Corporate debt to GDP is again one of the lowest. Companies loan ही नहीं ले रही है अभी तो. That's a complaint, right? So, point is that all these, so the analogy I give is, these are like vitals of our body, right? So, you can't do anything if my vitals are strong. I mean, I can't do anything about the viral attack. That will happen, that's environment. But if my vitals are strong, I will be down with 2 days with fever. I won't be ICU case, it won't be fatal. But if my vitals are weak, I will become fragile 5, I will become, I go to ICU, I might die. So today our vitals of economy are very, very strong. As a result, economy, we are not going, that's the reason we don't see deep corrections. That's the reason we don't see, because every time there is a correction, there are more and more people waiting to buy. So I think that's the real strength of, so our lot of historical vulnerabilities have been repaired. And that's what the work which is, which is there. So this is how I think about India investing. Now other question I'm sure will be about Trump, which is a very top of the mind question in everybody's mind. So I'm just kind of, taking questions which I'm in my mind, what will be on everybody's mind. So nobody can predict Trump. If anybody, please tell me, but my own take on that is that, see, politicians are very smart people. There's a very big difference between rhetoric and the reality. Trump also knows that no matter what he does, he can't produce goods in China, in America. I mean, they have $1 lakh as a salary. Hamara 12,000, 15,000 ka salary. How would you compete with that? So there's no way. Of course, some amount of posturing will be there. Some amount of high-tech manufacturing might go there. He will basically create some noise and, so this might create some volatility in the market for some time. But there's no way. By the way, Biden also did tariffs. After Biden announcing tariff, the current account deficit between China and US, it means US should have imported less. It went up. Because the US does not produce anything. Of course, they are good in technology, but they don't produce anything. So are people not going to consume? So I think rhetorics are one part. If he does too much tariffs, it will all be inflationary in US because people will have to pay that much. So I think, in my opinion, he will do this noise. He's kind of a bully guy, but in some sense, I think, he has his own approach and style. In my opinion, all these things we shouldn't have to worry. I think eventually we have to see India's story. Good part is that India is one of the most solid economy set to grow at 6 to 7%. Structurally, there's no risk to that. There could be there's no U-turn to that. There could be some, speed bumps. There could be, all those things will keep happening. When I'm saying Nifty will go to 1 lakh, 1,25,000, it's not happening tomorrow. We will have all issues of scams and sab kuch hoga, election hoga, state election hoga, sab hoga, all those volatility will be there. But directionally, India is very well placed. And according to me, these too much tariffs on India is not a big reality. Even with China also, I don't think it's a big reality. I'm sure some compromise somewhere will be found out in due course of the time. And if market turns out to be volatile, take advantage of that rather than getting worried about it. So maybe I'll pause here and happy to take questions.
Mr. Menda?
So way back here, Dr. Sanjay.
It's not a question. It's not a question,
you just,
but a compliment to Mr. Kemani for giving us a great perspective of India. I'm very much pleased with the perspective that you've given.
Thank you, sir. Thank you. Appreciate it.
Ashish?
Well, Mr. Khemani, truly, a lucid presentation of the Indian budget and the future that India has. Wonderful, I must say, compliments to you. Your command over the subject, over the figures and facts that you have, truly commendable. Wonderful for that. I have a little small query. Well, I still remember 2009-10 when Finance Minister Pranab Mukherjee presented budget. He said we are crossing a 10 lakh crore of our budget. It was a big thing, achievement at that time. Just about 15 years down, we are crossing 50 lakh crores now. This budget has outlay of 50.65 lakh crores. Be that as it may, the revenue is only 36 lakh crores. The 14 lakh crore, they say 20% rupee comes from 24% borrowings. Okay, 24 paisa comes from borrowings. And if you look at the outlay, 20 paisa is going to interest payments. I think we are just borrowing now, probably just servicing the interest. That's a cause of concern, though you said the debts are coming down. But I also read the budget, the debts are coming down. They project the debts to be in control. But still, as of now, what we are, the outlay, the money is being borrowed just to repay interests. One. Secondly is the forex reserves. September 24, we had $703 billion as reserves. Today, we are at 623, down by nearly 12%. Is also another cause of concern. If your views on that, please. Thank you.
So I think, again, valid point, but this is called what you say, amount of money going towards interest payment is called, what's the word, some deficit. So it's a basically current deficit, which basically goes for, but again, I must tell you that India's, that number is one of the lowest. And as you go towards fiscal, in US, 60% of your budget goes towards interest payment, despite interest rates being so low. And in fact, that's one of the biggest alarming situation there. US is the biggest borrower in the whole entire world. Correct. So, the point I was making that if you are following a fiscally responsible deficit path, your borrowings are either going to remain in check, but you can't suddenly overnight, change the budget, right? Governments also have to, and some amount of fiscal deficit is good because in a developmental stage of economy, somebody has to do investments. Who will do that investment? Government will have to do, today, everything is not viable based on only private and, user pay basis. So government has to lift that investment and, recover it through different ways. So if government spends money, tax collection goes up. So I am not worried about a moderate level of fiscal deficit. We are actually, our debt to GDP is 76%, lowest in the world. So it's not alarming. And sorry, what was the second question was? Forex reserves.
Yeah, sorry, please go ahead. Sorry.
No, I think so. Our forex reserves are robust. I think, they could go up and down in a short term because of, I think, recent, we had some outflows and all those things. We had some bulky repayment of the debt.
$4.6 billion have gone out in portfolio exits itself. It's also another cause of concern. And with the dollar index though coming down, the rupee is depreciating. All these are cause of concerns. Of course, the budget tries to address. It's a remarkable budget, no doubt on that. But still, all these are causes of concern for the Indian economy as of now.
Not necessarily. I'll tell you why. See, today rupee is not depreciating. Dollar strength happening. Because of this all tariffs and all those things, money is going back to US dollar. So when US money goes back to US, dollar appreciates, hence everything else has to depreciate, right? It's a simple equation. Now, in between, RBI was trying to defend rupee. If you see when Shaktikanta was there, he was trying to maintain at 85, 86, and when you do that, that's how your forex reserve depletes also. What it created was, it created huge amount of liquidity crunch in the economy. Because when you protect rupee, you keep the rupee strong, you suck out liquidity from the system, right? Because you are selling dollar and buying rupee. So you are sucking out the liquidity in the system. And that created huge unintended economics. So in my opinion, when Chinese currency is depreciating, you need to keep at least at par with that. Actually, absolute amount of rupees is unimportant. It is relative to other competition what you have.
We are still the best economy in the whole Asian continent and the best, least depreciated rupee currency in the
We are still strongest, one of the outperformance economy. But keeping rupee very strong is not a good idea. You have to, because tomorrow your exports will become...
being an import-driven economy also makes a big difference to the rupee losing its strength like that.
Yeah.
Anyway, coming back to the fiscal deficit at 4.4%, what they peg at, the FRBM mandates them to peg it at 3%, which they've been trying for several years, but they don't able to match the FRBM. Every year they get approval of the parliament and cross 3% of the FRBM. 4.4 though is a good achievable figure. I do not know how much they will achieve. Anyway, thank you for your inputs. Thank you.
Yeah. No, but see, that 3% was pre-COVID. And because of the COVID, they had to step that up. And after that, they're trying to bring it.
During COVID was, I think, 12%, I think.
No,
10%, 8%, 10, 9%, I forget.
It went to 6%.
I forget the figures. 7%? Yeah, they crossed that completely. They crossed 5%. Yeah. FRBM provides for 3%.
US did 12%.
And US did 12%. India also did, I think, 7-8%, if I'm not mistaken. FRBM says 3%, they go less than 5%, and somehow the parliament ratifies and goes through. But they should achieve.
So it's a balance
3%.
between growth and this deficit. If you keep deficit, it will have impact on the growth. So I think moderate one is good. Yes, sir.
As you said about this, As you said about this growth, is as long the BJP is in power, it'll grow, or what happens in case?
It's a very valid question, sir.
Government or anything.
2029 में क्या होगा, right? आप तो 2047 की बात कर रहे हो, right?
No, sir. So as long the BJP is power, we are. No, just as you said, Amrit Kal.
No, absolutely, it's a valid point. So this is a very valid question that, what happens if the government changes. So my limited point, first of all, two things here. And my own view is that I think this government is not changing in a hurry, even given their political prowess and, kind of grassroots work. They're even assuming they change, two things. One is, first of all, 29 तक तो कुछ नहीं हो रहा है. उसके बाद में, what can happen? See, if you just think about it, once a culture and momentum of the growth builds, it is very hard to undo a lot of things. Can you undo GST? Can you undo UPI? Can you undo a lot of things? So a momentum of the growth builds. Like the example I like to give, a very crude example, but when the plague happened, I was in Surat, all of us must have heard, and it was one of the dirtiest city. And then the commissioner there took initiative, and 97 onwards, he cleaned the city, making it one of the cleanest city. But he went 20 years ago. But the culture of the city continues, and it is only getting better and better. So sometimes that whole culture, momentum needs to get built. And then, there is, system builds the sort of pressure to sort of carry it forward. चल जाती है, गाड़ी पटरी में चल जाती है. My point is, assuming, let us say, Rahul Gandhi becomes Prime Minister and they start taking the policy which reverses the growth. Market तो खुला ना, सब word change कर देंगे. We can sell always, right? My point is, we cannot not take a positive view on economy in fear of something will change in 29. It can change. I don't have any, nobody is guaranteed that politics won't change tomorrow. It can. Tomorrow some, let's say disabling. And my view on that, India mein, as long as there are three kinds of government: enabling, neutral, disabling. Right? As long as we don't have a disabling government, we are fine. UPA 1 was a neutral government. UPA 2 became a disabling government. That's the reason, if you see, we had biggest amount of damage in that period. Because in UPA 1, there were checks and balances, left was part of the alliance, but the moment they got kind of significant number, they went to the town, right? So as long as we have neutral to enabling government, we are fine. Only thing is, we should not have a disabling government. But if suppose tomorrow we feel that something is really good, we can always sell and exit, right? That's the choice we have.
We'll take some questions from the back.
Yes, sir.
Hello, sir.
Jawar.
Yes, sir.
Do you think the...
So I can't see from far, so just please, you can send the mic there. So,
There is a mic there.
I'm about exporting to...
Sir, I can hear you otherwise also. Aap boliye.
Do you think the government is doing enough to get the local, I would say the really poor people educated, or getting them a good healthcare solutions? I don't see any urgency or any kind of approach which can take the entire country out of illiteracy and bad health.
Very good question, sir. Same thing can be applied for employment. So I will only answer this question first philosophically and then see, all of us seek perfection. The fact of the matter is, life is neither utopia nor dystopia. My one learning of 25, 30 years of all we should focus on rate of change. Is it getting better than yesterday? That rate of change is positive or not? Are we uplifting more people out of poverty? Then yes. Are we providing more health care to the poor than before? Answer is yes. This Ayushman Bharat Yojana, sir, I am telling you, we don't realize the number of people who are getting free health care, poorest of the poor, is unbelievable. My office boy, he came to me, sir, I want 1 lakh rupees. I said, kyun chahiye? My mother needs to do some operation. So I said, kya hua? Then I said, by the way, have you applied for this Ayushman Bharat? He said, nahi, mujhe nahi pata hai. He went to, so I said, go and ask in wherever you are living, somebody will be. He went, he online registered himself through a help of somebody, paid him 50 rupees, and he got online card, and within 7 days he got a surgery done free of cost. Now that is the power of, now this is incrementally providing health care to poorest of the poor. Today you can do 5 lakhs rupees worth of surgeries and everything free of cost. Now, think about it, sir. One way to think is, these are the freebies. But structural way to think this is, suppose, let us say, poorest of the poor, our labor class, lower end of the society has access to the better health care. Forget for time being, who's paying it? Is it not improving our national productivity? So, the real thing is, national productivity has to improve. Let government pay. But once they get to a situation, they are uplifted up, they will find their own feet. And it is this desire of this government to reach to the lowest of the lowest in the society to enable them through various initiatives. But kind of country we are, it is never enough. The kind of size of the problem, sir, to lift 25 crore people out of poverty in 10 years is not a joke. It has not happened in the human history. So we very often do not appreciate the challenges of the, enormity of the task at hand. And hence we see a very limited perspective. And I always say that whenever you see, think, it's very easy to, look at narrow view and criticize government. But it's very hard to get it done. Think about it. Again, let me tell you, we all know Kumbh is happening. Just imagine, all of you run big companies and businesses. Imagine 40 crore people coming to a town in a month's time, managing the entire logistically comfortably. Has it ever happened in the human history? It has not happened. This is new India. That we can think size and scale which has never been thought through. 40 crore people, 1/3 of country going to a town in a limited area in a month period is, as a private sector, I at times think and I start thinking, how do they manage? So, and when we start thinking, empathizing government, we start thinking the enormity of the task at hand. So all I'm just saying is that employment, is it getting better? Are we employing more people than before yesterday? Answer is yes. Are we employing all people? Answer is no. So as long as we are focusing on rate of change and whatever, that's the one I would say to look at it.
Hello, sir.
Question. Yes, sir.
I'm an NRI returning back after 40 years in US. Yes, it's the most highly taxed country. Here, I feel it's a tax terrorism. Neither can we survive without paying taxes, nor the Atmanirbharat has taken up momentum enough. Our exports has not reached what those advanced countries should reach. Yes, we have technologically more advanced, and all these are lift-me-ups. I don't need pick-me-up after 70 years of freedom.
I can give you that answer. So these are all, see, again, there are two perspectives. Look at glass is half full, half empty. Like I said that I can look at the same US in a very different light when, despite paying 40% tax, if I have to get heart surgery, I have to wait for 6 months. The healthcare system there is crumbling. Ease of doing business, America talks about it. I am trying to, so as a fund, we are registering a fund in US. I am told by the lawyers that I have to do filing in each state separately, 50 states, and each state has a different rule. And they're talking about, they are preaching us ease of doing business. Yahan pe I can do one filing and get away with it and all. There's one rule, you can open account in 3 days. So what I'm saying is that there is always a way to look at, and everybody's choice, I have no qualms with that. Glass is half full, glass is half empty. And unfortunately, our media creates a lot more hate because, see, media gets paid to talk about negative, right? Nobody writes that today 18,000 planes landed safely. But if something doesn't land safe, something happened, it will be all over the place, right? So what works well, nobody wrote, and unfortunately a stampede happened. It was a big problem, but every day 40 crore people are, 2 crore people are being done. Nobody talks about that. So what I'm saying is that tax terrorism, all those things are good, and there are different way of looking at it. I think my only measure of, I have a friend of mine who's Commissioner of Income Tax. मेरे पास एक ही measure है उसका. He told me one thing, that incrementally nobody wants to be in income tax as a posting. Why? I don't need to tell you guys. That attractiveness that has gone away. Why? So I think, to my mind, that is the barometer of corruption going down. Again, are we completely corruption-free society? No. But that way, US is also not a corruption-free society. One guy in the government running, company. So I'm saying, वहाँ पे अलग तरीके से होता है. उसको lobbying बोलते हैं. हमारे यहाँ पे अलग तरीके से होता है. So I think, again, I'm telling you that don't think, if you want to take a perspective, life is neither utopia nor dystopia. It is somewhere in between with a positive direction. And I for one, and as an equity investor, I am again telling you, one should not be blind to risk. But as an equity investor, you have to be optimist. And I am an optimist, and I always see the right. And eventually, if things change for worse, you can always sell and move out, right? Nothing is, stopping you. That's the beauty of the market in investing, right?
I think we take further.
Hi, Vikas.
One last question.
Maybe someone else. Hi, Vikas. Great to hear you optimistic, and you sort of raised our mood up. That's the only time I've smiled this whole week. If I've looked at my laptop, at my portfolio, I've been crying the whole week. But it's great that we heard something optimistic. My question is, you mentioned that the corporate debt to GDP is the lowest. I mean, it's coming down, or it's not really, they're borrowing less. It's also the year, what I've been reading is, corporate investments are at the lowest. So corporates are not borrowing, they're not investing enough. Could that be the correlation that the corporate debt is the lowest to GDP, or it's going lower? That's my question.
Yeah, great questions. That's actually not true, because see, this time around, if you see, the capex is being funded by two things. One is by the lot of internal accruals, because in last 3-4 years, corporate profitability has gone up significantly. So every company is generating a lot of cash. Secondly, equity funding has become very easy. So given whatever happened in IBC and a lot of people lost their companies and all those things, initial part is people are slightly averse to do investment through the debt. So more and more equity, and fortunately the environment of equity raising is allowing them to do investment through equity. But that does not mean that investment is not happening. It is just the way of funding has changed. It's not happening through debt. And that's the initial part. Eventually now, as we have large-scale projects of power projects, like let's say Jindal just announced big capacity expansion in the cement as well as steel. They are going to fund through corporate debt. So it's happening, but excessive debt is also not good. So it's the only reflection of the investment cycle, I would say, the biggest reflection of the investment cycle is in the order book of the capital goods companies. If you see companies of L&T, Thermax, or any, they are all-time high. The order book is what you are supposed to put plant. So, and I'm sure people who are in business here, I mean, I say this with a lot of responsibility. I meet a lot of companies. I don't know any company which is not expanding in their own ways. Small company, 50 crore, large company, 500 crore, in their own way. But it is a lot more sensible, calibrated kind of expansion. It is not like what happened in 2010, 11, 12, where anybody, Tom, Dick and Harry put up a power plant, fixing the minister, fixing the bank, and eventually handed over the asset to the bank. That is not the capex you want, because it will eventually create a problem. So you want a capex which is well calibrated, right capex, viable capex, and that is what is happening right now.
I think
Thank you very much.
1 second.
Yes, I think the sir has been asking just 1 second.
Okay, Uncle, last question.
Uncle.
It's again not a question.
Sorry,
you are the best ambassador of BJP. You are the best ambassador of BJP. But jokes apart, your clarity of thought, your analysis is amazing, and the knowledge that you have on your fingertips is really, I mean, we left wondering how can you manage so much knowledge in such a tiny frame of my body. My compliments to you. And one last thing I would like to say, that we are going to leave this hall with a very good feel-good factor of being an Indian, and of course, our leader who has led us so far bravely and very confidently. We hope we are led in this same fashion for another 10 years at least, God willing. Thank you.
Thank you so much, Vikas, on the masterclass on mindset. We were here for decoding the budget, and we got a masterclass on mindset. Thanks, we all appreciate. You can feel it from the vibe of the room. Thank you so much. I now call upon Mr. Samrat Bose to please hand over a token of appreciation for Vikas Khemani, who came all the way. On our president, Mr. Madan. Please come up on stage.
put this event together and collaborate between Sindhi Chamber of Commerce and 361. My partner in crime, Roshan, please come on stage. I would like to hand over a token of appreciation to you.
What a session this has been. As was rightly put in by Shyam Talreja, that all our spirits were down before we came here. And today, before having a drink, we are all drunk. Thank you, sir. That was really inspiring, and I think was rightly said by our seniors, that you should be the brand ambassador of the Modi government, and he'll never be out of power, I can assure you that. It's been a wonderful session, and like I said, our chairman for lectures has not allowed our team to rest at all. We took office on the 10th of November, and this is the third program we have already had. And the good news is next Tuesday, that's the 11th, we are having Gautam Shah addressing us. So an invite would be sent to you all, and I request you all to please come and take an insight as to how and why these stock markets are behaving the way they are behaving. Thank you so much.
Good evening, all. I deem it a great honor and privilege to propose the vote of thanks on this memorable and signature event of our association. As William Arthur rightly said, feeling gratitude and not expressing it is like wrapping a present and not giving it. Today I take this opportunity to express my deepest sense of gratitude and appreciate all those who have made the event such a renowned success. First and foremost, I would like to thank our special speaker, Mr. Venkatesh Kalyana Sundaram, Executive Vice President of 361 Wealth, for enlightening us on the tax changes and policy impacts of the finance bill. I place on record my gratitude. Thank you, sir. Next, I place on record our gratitude to Mr. Vikas Kemani, founder, Kamlan Asset Management and Advisories, who spared time from his busiest schedules to grace this occasion and his guidance for the sight of the impact of the markets and opportunities ahead of the budget. Thank you, sir. Next, I would also like to thank Team 361 for their generous support for this event. Your encouragement has constantly been appreciated, as an event on this magnitude cannot happen overnight. Thank you all. I must mention our deepest sense of gratitude to our chairman, Shri Suresh Bhatia ji, and all office bearers, especially the president, Shri Madan Daulatram ji, Vice President Vijay Chawla ji, Treasurer Shri Vishal Asrani, and Joint Secretary Shikrish Bhatija. As an event created at this level cannot be possible without meticulous planning and a bird's eye for details. We have been fortunate enough to have been backed by a dedicated and motivated leadership quality in them. A big thank you to everybody. Also, to mention our gratitude to J.W. Marriott and their staff for the help extended and the support and the cooperation with a wide spread of hospitality. Finally, I thank the Almighty for the smooth and orderly conduct of today's event. Once again, thank you all who are present here. Thank you so much.